This is the simplification that I make for daily bias. If you stick to these rules, you will know how to find daily bias as I teach it. My students follow these rules. Okay. I'm going to go through them with you, and you're going to be kicking and screaming and saying, no, there's something else you're holding back. There isn't. It's experience. It's doing it yourself. But the keys to daily bias are simply this. Everyday bias is unrealistic. If I go in looking for a specific predetermined daily bias before the market starts trading, invariably, I'm going to have it incorrect. Notice I said that I'm not perfect. Some of you hold me up to this hero level status, and I'm not a hero. Okay, I'm just somebody that knows what they're looking for and knows how to avoid, hopefully, making the same mistakes over and over again, because I'm looking for a procedure and process that will lead to an outcome that generally, not all the time, but generally yields a specific result. So I'm not trying to get a daily bias every single day. I'm trying to determine the likely weekly expansion. And again, what is that? I utilize a weekly chart and I study that, and I want to see, does it look like it's going to run to an old low? Does it look like it's going to run to an old high? Or is it running to an imbalance below the market price? Or is it trying to run to an imbalance above the market price? Or is it likely not to move because there's no data for it for that week? And other markets have high impact or medium impact news that would be more interesting, and the algorithm will be working those pairs or markets. And the pairs or markets that don't have a high impact or medium impact driver will probably be a lackluster market environment. I'm looking for the direction of an expansion move. I'm not trying to get the entire weekly range. I'm not trying to buy the weekly low and sell the weekly high. I can, but that's not what I'm trying to do. You don't need to do that, okay? I know some of you hate when I do that, but I'm trying to make sure that you understand there's a distinction between what you should be coming into this with in terms of expectations and what is realistic. Okay, in the beginning, all you're trying to do is determine, is it likely to expand higher? Is there going to be a big move, a flurry of activity going higher during the week or going lower during the week? And by itself, that is huge in terms of what you're trying to pick. Now, you might be wrong, because sometimes I get it wrong. But I'm looking for some volatility in a direction based on what I'm studying on a weekly chart. So this is a daily chart shown on this slide here. The same thing I would be doing to determine where the daily chart's going, I'm trying to do that with a weekly chart. But I'm only interested in seeing what's it likely to reach for. I'm not trying to predict the weekly closing price on that candlestick. I'm trying to look for where is the bulk of that volatility going to be pushing, higher or lower, and why would it be like that? And it's as simple as what I mentioned earlier. Is it aiming for and gravitating towards an old high to run above it? Or is it gravitating towards an old low to run below it? Or is there an imbalance where it needs to come back and revisit that? Because it might just drop down to a fair value gap to go higher longer term. I don't even need to know that. All I need to know is, what direction is it most likely to have the majority of the volume pushing through? Now, when I say volume, there is no centralized volume number in Forex. When I say the volume, that means the interest, the chaos, the energy, all the activity, the action, okay? Is it going to be on the higher side, reaching for buy side, or is it going to be on the lower side, reaching for sell side? That's what I'm looking for. I want to find, where is it likely to gun for this particular week? Who's in the crosshairs? Have people been making money going long? Is there a low that they're going to try to run down and stop them out with it? That will be enough for me to frame an expansion going lower. So I'm looking for obvious liquidity in that direction. Below old lows, above old highs, or identifying imbalances in price delivery top down. That means from the weekly down to the daily, down to the 4 hour, down to the 1 hour, to the 15-minute chart, And then once we get to the 5-minute chart, you do the scalings from 5, 4, 3, 2, and 1, whichever has the clear, obvious fair value gap for you based on the model's rules. And I focus on days that have high or medium impact calendar events only. So if you go through your economic calendar, in fact, you can look at next month's economic calendar. They're already there. Where are the high impact or medium impact news events for the markets that you trade? What day of the week and what time? So if you have a news driver that's coming out on a particular day, say Tuesday or Wednesday, and you're expecting the weekly range to expand lower, well, on those medium impact or high impact news events, I'm going to see hopefully something that is going to run up higher, go into a fair value gap, or run above a short-term high, run stops, then break down, show displacement, then create a fair value gap, and I can go in short on that. And I'm doing that and looking for that setup and that directional price run inside my kill zones intraday. At the same time, the economic calendar is suggesting a high impact or medium impact news event is likely. So what did I just teach you here? I basically said that there is absolutely no expectation on my part to know the bias every single day of every single calendar trading day. I'm only focusing on these sweet spots, these low-hanging fruit days where everything's coming together, all the stars are lining. Okay, I'm looking for the higher time frame weekly to expand in a specific direction. That starts my bias. And then, if I think it's going to be going higher or going lower for a specific target or imbalance, then I'm going to go to the economic calendar to look for when that might occur. Now, there may be a move that happens prior to the economic calendar event occurring, and that's just going to be a missed opportunity. So you have to use something else, some other pair, something else that you got to trade with. Sometimes that occurs. But you'll see that there's a lot of opportunities using this criteria. And it's very forgiving for you as a developing student because it's already given you permission not to know the daily bias outside of these rules. See, you want to trade every single day because you want to be the everyday trader. I don't want to be the everyday trader. The everyday trader is more prone to have losing trades because they are trying to do something every single day when there are times when you should not be trading at all. And that's what makes me different from all the other educators out there because I have made a career out of knowing how not to destroy myself because that's what I did when I was a 20-year-old. I thought that I could trade every single day. And that's problematic when you don't know how to trade and you have a lot of time or lack of self-control. And that's why I was blowing accounts when I was 20 and 21 and 22. That fevered pace of, I got to do it. I'm going to miss that next move. When hopefully you've seen now enough instances where this pattern repeats a lot over the course of a month. It's in most markets a few times a week. But if you notice, those moves are occurring when there's a high impact or medium impact news driver on the economic calendar. So it's something that you can plan for. You ever hear the old cliche remarks of books and educators? They say, plan your trade and trade your plan. Well, this is how you can do that with that model. You look for the economic calendar, the time of day, what kill zone, in the market you're expecting an expansion higher or lower on that weekly chart. There it is. You're looking for these things to repeat. And if you start journaling these things, you're going to notice that the setups, this is one of the epiphanies, okay, because I know some of you just don't want to do this, but now because I'm going to tell you, you're going to go into it hopefully and see that what I'm saying is true. If you backlog every day, show everything that took place, mark up your charts, as I'm going to show you in some examples in here. When that happens, over time, you're going to see that the best setups occur when these calendar events are in play and they originate around that same time. And then what will happen is it'll convince you to say, okay, I don't need to be the everyday trader. I don't need to be in here being super scalper. I don't need to be in here trying to be an Olympic trader, because trading is not an Olympic sport. It's not an Olympic event. And they don't give out gold medals for overtrading. But they do blow accounts. So eventually doing that enough, and if you don't know what you're doing, you're going to blow your account. And that's hopefully what I'm trying to prevent you from enduring.